Hello, welcome to this week's How's the Market, Pensacola. Tell you what, you better buckle up, Buttercup. We got a hurricane, we've got COVID going up, we've got the Dow dropping 700 and some odd points, we've got 1 week until the election, and if anybody thinks we're going to actually have a winner next Tuesday, you haven't been paying attention. We've got all kinds of stuff going on. On top of that, it's Halloween with a blue moon, full moon. Yeah, how does that all that tie into real estate? Let me talk to you. Let's go. All right, so I normally start the show with a slide, and I'm going to get there in just a second, but I wanted to explain, honestly, why we saw the drop in the market like we did. What happened was there was a lot of uncertainty in the stock market, in the equities, that came about because we saw a spike in coronavirus. A lot of people were not expecting a massive shutdown again. Now that looks like that may happen. So that's scaring the street. And they're also getting closer to the election. I've seen this is definitely much more presidential elections that I've seen. They're starting to have uncertainty. When you have uncertainty, money moves away from equities. Although the Wall Street Journal came out this week, I want to say it was either Monday or Tuesday, and said that corporations' default on debt is actually a lot lower than was expected, because they were expecting a higher default rate on debt due to the shutdowns. You don't have the income, you can't pay the bills. Corporations are no different than people, so they were expecting a much higher default rate, and that has actually been lower than anticipated. But that's okay. They're worried that that might creep up some more when we start talking about another shutdown if we do that. Again, the presidential election, yeah, okay, I'm not even going to go into politics on which side is what plan, and I'll let you figure that out. Go vote. That's all I say. Go vote. I don't care who you vote for. Go vote. But what does that impact real estate? Well, when money moves out of equities, it moves into safer investments. The safest investment on the planet is considered a treasury bond, backed by the full credit of the United States of America. When people rush to treasury bonds, and I'm talking specifically the 10-year, when they rush to the 10-year treasury bond and put money in there, the yield goes down. Basically, the treasury doesn't have to pay you as much to borrow your money because they get a whole bunch of people behind you. If you don't want it, great. We'll give them, 1.8, 1.1, 1.2, whatever it is. When that treasury yield gets down to a certain point, it is not attractive to investors. So they're willing to take a little bit more risk, but they don't want to go back into equities because of the uncertainty, right? So what's a step above that? Mortgage-backed securities. That's why we see rates as low as they are, because mortgage-backed securities, just like treasury yields, they do have a slightly higher risk, so they pay a slightly higher yield. But as people start lining up to buy them, that yield continues to go down. So that's how this week looks like it's shaping up. We're probably going to have a decline in equities due to uncertainty. The street hates uncertainty. They like to see steady growth. They like to see, it's not the Wolf of Wall Street where you're flipping stocks that you see all the time. Most money managers, most fund managers want to see steady growth, just like we do here in the real estate world. But when you have such uncertainty, they still have to put their money to work somewhere, so they rush to treasuries, they rush to mortgage-backed securities, which is impacting our interest rates on mortgages, and it's also rushing to corporate bonds, which is slightly higher than your mortgage-backed securities. So that's how this week is probably going to impact real estate. If you're getting a mortgage and it's time to lock, I would definitely be talking with your mortgage person about locking this week, because after the results of the election, we're going to have at least a little more certainty. At least that uncertainty will get off our plate. What happens with coronavirus? What happens with, I think Johnson & Johnson, I know Eli Lilly, they all are heading into phase 3 trials for a vaccine. I don't know if it's a vaccine or a cure. I forget. I read it, but I don't remember. Anyways, once that gets off, that's when things can start to get back to normal, because it's the uncertainty of shutdowns. Anyways, let's get down to the charts for this week, because Just like I've been saying the last couple of weeks, it is crazy low inventory, and I'm going to show you that right now. All right, we jumped down to the screen here. I always start, if you haven't seen the show, I always start off with this slide right here. It basically says if we have between 6 and 7 months worth of inventory, we have a neutral market. Anything greater than 7 months is a buyer's market. Anything less than 6 months is a seller's market. What the slide doesn't say is anything greater than 9 months is considered a hyper buyer's market. Anything less than 3 months, and that's key right now, anything less than 3 months is considered a hyper seller's market. Let's take a look at our 2 counties this week. Then we're going to start with Escambia County, and as you can see, everything on the left is the list price. On the right over here is your month's inventory. That's why I show that slide. Everything under $550,000 is a hyper seller's market. And if you look at these numbers, between 100 and about 250, there's under 1 month's worth of inventory. We don't get new houses on in that price point. We'll be out of houses by Thanksgiving. Nothing. So the 100 to 250, which is that first-time home buyer, right? Some of these are move-ups. Right? I know of some clients that moved up to a $240,000, $250,000 house. They had their $100,000 house for a couple of years. They've now turned that into a rental. They've moved up. So now it's impacting move-ups as well. And the 3 to 350, look at that. That's definitely considered a move-up. In our area, that's under a month as well. So everything under $550,000 is considered a hyper seller's market. And if you look, we do not even have a neutral market in Escambia County at all. 700,000 plus, well, from 550 above. It's not a hyper seller's market, but it is a seller's market. It's just a lack of inventory. Look at that, 650 to 700, there's 6 properties. There's 6. This is what makes me nervous. 100 to 150, there's 38 properties total, and you've seen some of these. We're definitely going to be looking at doing some rehab loans very, very soon, especially after what happened with Sally. That's Escambia County. I'm just shaking my head in Santa Rosa County. Everything under $650,000 is a hyper seller's market, and 650 to 700,000 or 650 plus is almost a hyper seller's market. It's almost a hyper seller's market. You've got 650 to 700, really, I mean, it's at 3 months. So the definition says anything under 3 months, but they're right there at 3 months. And then 700 plus is 3.5 months. So even the luxury is right there. We're at a point right now where in Santa Rosa County, it could be a hyper seller's market across the board. And if you look in Santa Rosa County, 0 to 50,000, there's nothing. Nothing. 0. Zip, zilch. Not even a lot. I can't even buy dirt for that. That same price where we were talking 100 to 150, there's 6 houses. 6 houses available. So somebody trying to do a first time in Santa Rosa County, it's ridiculous. So I say all this to let buyers and sellers both know. Buyers need to realize what the market looks like right now so that you can plan accordingly. Don't come in for a $140,000 listing thinking you're going to pick it up for $100,000. You're probably not. Why? The seller can get 140, if not 160 for it. I sold a house a month back. Literally, they were asking 265. The buyer came in and said, all right, I'll give them the 265. And I said, and you won't get it. You will not get it at that. And they said, well, what will I get it at? And I said, it's going to be higher. And since we have closed now, I can tell you, she had to go to $292,000 on a $265,000 house. She bid $292,000 cash. When it closed, I asked the agent, because the agent that represented the sellers could not ethically tell me what the other offers were while we were under contract. I asked her once we closed, because now that ethic, she has obliged by her ethical obligations. She told me we only beat it by $1,000. So that means somebody else offered $291,000. So as a buyer, if the property's in good shape, that's what you need to pay attention to. All right, are there contingencies? Yes, it's not just about price. There's also less contingencies is better. And you just look at these numbers, the sellers are dictating the market right now. That wasn't always the case. You know, you can go back and look. I've been shooting this show for what, 2 years? Well, I guess it'd be 2 years, April. So a year and a half now. Go back and look at a year and a half. It wasn't dictated that. There were buyer's markets in some of these price points. So I do this show so you can see the difference in how you can watch trends. Right now, the sellers dictate the market. So as a buyer, pay attention. If you're selling or you're considering selling, reach out, because you can press this some. Not a bunch. I have seen some sellers getting crazy with stuff that, you know, should be listed at 300. I've seen come on the market at 475. You know, and they reached out to me first and said, well, I want to come on at 475. I'm like, well, it's worth 300. We can probably do 310, 315, maybe 320, but I still have an appraiser that I've got to appease. No, if you're not willing to list it at 475, I'm going to find somebody who will. They did. I looked at the person and listed it. They've listed about 2 homes in their career. So they found a rookie agent. I understand what sellers are doing right now. I get it. This is why we have to have tough conversations, though. We just do. We have to have tough conversations sometimes because reality is reality. What is the reality of the market right now? It's a seller's market or a hyper seller's market. Looking to liquidate something, now would be a good time to do it. As some of that uncertainty comes off, the election, Corona, companies shutting back down or reopening, not having to do it because of Corona, then money will move out of bonds, out of treasuries, out of mortgage-backed securities, which means in order to entice investors to continue investing those, the yield will have to go up, which means the rates will have to go up. I don't see huge rate increases anytime on the horizon, short term anyways, not even say 2021. I think we're going to float probably in the 3s. But will we eventually get back in the 4s? Yeah. Will people say, hey, I should have sold a year ago? Maybe. Do I see a decline in prices? No, I don't. Do I see maybe a stagnation? Possibly. There is some economic data that says we will slow. Do I think that over 5 years you would lose money in real estate in our area? No, I don't. There's nothing that economically points to that at all. Are you going to see double-digit returns? Maybe, maybe not. Will you see a return? Yes. Everything economically says yes, you will. Of course, that's my prediction. Anyways, I could go on and on and on about that, but I want to make sure I give you this week's numbers so you can take a look at everything. If you're looking to make any move, whether it be this year or next year, give me a shout. All right, let's talk. Let's talk now. Let's have a conversation now so we can come up with a game plan, especially as we're moving into the holidays. Thank you so much for watching. Have a great week.
I'm a man on a mission.
My mission is to help people break through all the noise out there and
Don't need no permission.
I want to help you get to actual truth.
On a mission.
Don't you just want the truth?